Hey everyone, Ryan Mann here, Portfolio Manager for the TAMIM Global Tech and Innovation Fund. And today I'll give a quick recap of the Meta earnings. So as a quick reminder, Meta is still a founder-led business, and Mark Zuckerberg sees AI as a generational opportunity. So he's using this autonomy to aggressively pursue AI, both to make the current business more efficient, but also to find and expand into new business opportunities. He's recognized this as a pivotal moment in history, labeling it as one of the most dynamic and exciting he's ever seen. So given his control and vision, he's not shy about spending due to this opportunity set ahead. On the core business, growth came in at a healthy 20%. You compare that to a close peer, Google, they were more in the 12% range, so quite a spread there. And despite the significant CapEx spend and losses in the Reality Labs division, they came in with pretty impressive overall EBIT margins of over 40%. On the customer front, they have over 3.3 billion daily active users across their products, which is a little less than half the world population. And yet at this scale, they're still growing roughly 5%. Obviously, they're going to be hitting a ceiling there at some point, but the opportunity set will shift towards offering more products and deeper monetization of those. On the AI front, generative AI is a game changer for them. Basically, they're able to apply AI to advertising, and there's an immediate unlock. They're able to harness all the data that they have to more efficiently advertise. So they surface ads more relevant to you, and increasingly, ads are becoming indistinguishable from actual content. So this is leading people to spend more time and increasing the actual ad conversion. I think scale begets scale here, particularly with regulation effectively forcing a shift from the deterministic model to a probabilistic one. So essentially, if you don't have the first-party data, you're in a really tough spot. Jumping into Llama, which is their open source foundation model, they saw an inflection point with their latest release, and they're expecting another step function with their release next year of V4. So by open sourcing their actual foundation model, they're able to gather the collective decentralized feedback and intelligence, and they can then use those learnings and incorporate them into their products, designs, and architectures. So it's a pretty effective and efficient approach. And then quickly on Meta AI, which is their chatbot, they have a really massive opportunity to frankly embed this in their products, notably WhatsApp. So for things like business to consumer interaction that can be a lot better than the more simplistic robot apps out there today. On the capital expenditure front, they continue to expect significant CapEx growth into 2025, but similar to Google, that CapEx growth rate will decelerate. I'd also expect for both names likely to expect increased depreciation expense to begin to filter in 2025 and 2026 from this heightened CapEx spend. If you think about the actual life cycle of these NVIDIA GPUs, it's probably in the 1 to 3 year range. And so the actual depreciation is going to start to show up into results and probably start to weigh on some of the margins of some of these businesses. As we think about other products that Meta is also offering, I think they've had some early success with their Ray-Ban product. And so if and when they add augmented reality to that, I think that they're hoping that could be kind of the next platform. Right now, we're still on the smartphone, and I think Apple has a really big opportunity with Apple Intelligence, but the new platform opportunity is always out there, and this seems like it could be a decent one to pay attention to. So with that, I'll wrap up, and thanks, and be sure to tune in for more.